afternoon, everybody. Welcome to the Trader Merlin Show. My name is Trader Merlin. Well, my name is not Trader Merlin. My name is actually Merlin Rothfeld, but it's a Trader Merlin Show today. Today, I wanted to just kind of go into the mailbag and dive into a couple of trading Q&A questions. That's what I have slated here for us today. And, of course, if you guys have stuff, feel free to type it on the chat. Yeah, as Big Eb's question here says, Tesla took a dive. I believe the question was a couple days old, so I think that that's going back to the big sell-off we had from that overhead supply zone, but I will talk about that one here in just a second. So I guess I'll dive right into there. This is from John. He says, with the big dip in Tesla, would you be a buyer here? Look, I don't have a chance to get to these every single day as they come in, unfortunately, and I apologize for that, but I would like to. Here is the chart of Tesla. So, and I think what he's referencing is this sell-off, because this came in a few days ago. So obviously, we had this overhead supply zone mapped out on Tesla. It hit it a couple times and then fell out of it. So your entry, really, if you were short on this bad boy, would have been Friday, May 30th. Now, the question I was having for myself was, how far down is this thing going to go? Thought it would come back down to maybe the 331. And then, of course, with the fallout with President Trump, we saw a much deeper dive. Instead of stopping at 331, we hit a low price of 273. And I think that gave, great. Spinning wheels and blurry screens, huh? Well, isn't that great? Oh, thank you, Steven. It's not my end today. That makes me feel great. It says everything here is looking nice and strong. So, to John's question here, I guess I got to look bigger. If I'm looking at Tesla as an investment, I got to figure out what my time frame is, right? As a short-term trader, I don't care whether it's up or down. I'm going to just make the swings as I see them and as they unfold. If I'm looking, John, if I think that's what your question is, if I'm looking to buy it as a longer-term hold, then, sure, why not? If, again, how long is your duration? If your duration is the next couple of weeks, a couple of months, I would be a little careful here. Certainly after the rally we've had over the past couple days. And the main reason for that is we have escalating tensions not only between President Trump and Elon Musk, and you might remember that when Elon Musk sided with President Trump, all the Democrats were screaming up in arms, and we saw those who were of the voting party, the Democrats, attacking, keying, destroying property of Tesla, which was ridiculous. And now with the departure, I wonder if you'll see the opposite side of this, which is seeing the Republican Party and the voters for the Republicans now attacking Teslas, and who knows which way it's going to go. To me, it just means too much uncertainty for Tesla. Now, you could also look at the robotaxi, which I saw a video today driving around Austin, Texas, and okay, great. I think it's a fantastic thing. I am a big fan of the robotaxi. I think it will be a huge money generator for them. However, we have a much bigger issue going on in America right now, which is what's going on out in California with all the riots. You have them now in Austin, Texas. And I think, unfortunately, that we're going to see this escalate until something happens to stop this chaos that's going on, not just in California, but in other states as well. So for right now, it just would make me think that Tesla is extremely vulnerable to far more volatility than I may want to deal with. So at this point, Margaret, I hope we don't get a summer of riots. I really hope we don't. And I want to clarify something. I got in some viewer came at me yesterday on Twitter and was throwing all kinds of obscenities at me and calling me all kinds of names and really just off his rocker. And I had no idea where this guy was coming from. I don't know. Some of you actually got to see the comments going back and forth. And I'm like, dude, you're crazy. And basically saying that I'm a coward, that I'm a loser, that I'm an F person because I voted for this system. And I'm like, bro, you don't even know me. You have no idea who I voted for. Do I condone people throwing rocks at police officers? Hell no. Do I think that the officers should be able to respond with live ammunition to people throwing rocks at them? Yeah. I don't think that we should have non-lethal weapons. If you're going to attack a police officer, you get what's coming to you, buddy. No way around that. So anyway, it's really unfortunate what's going on. Obviously, it would be great if we could have some peaceful resolution to it, and I believe that everyone has the right to protest. But there's ways to protest. Throwing rocks at police officers, attacking horses, and things like that is not the way to do it. There's definitely better ways that you could do it in a peaceful way and have your voice heard, as opposed to destroying property and make absolute chaos of it. So for those that for the clown. He can probably listen today. Because I haven't blocked him on YouTube yet, but he's blocked on X because of his comments. But to make blanket statements about somebody, and I responded on Twitter. I said, "You're making these statements simply because I live in California. I live in California, therefore I have to have voted for this and I have to support what's going on. You're out of your mind." And I think this is the problem in America, is the ignorance and stupidity of some people to say, "Oh, well, you're from Texas, therefore you have to be a Republican and drive a truck." Or you're from Detroit, you have to be black and poor. Or you're from California, you have to be a liberal that will, allow transgenders and agree with anything that's liberal. And that's just stupid. It's actually stupid. And this is why we have our issues in society today, is ignorant people like that making blanket statements. It's almost like a form of racism to go, "Oh, someone from California, you're this. No matter where you live, you're this." I just think that's just stupid. Ignorance. Total ignorance. So I blocked the guy. I told him on YouTube, I go, "The next comment you make to me should start with an apology, because what you're saying is completely out of order." Funny, because you live in a relatively... I don't. It's funny. I really do. I do live in a fairly conservative part of California. But that doesn't make me conservative. Doesn't make me liberal. I choose to live here. It just happened that I live here because of work, right? Why do I live where I live? Because my office is 3.3 miles away and it's convenient for me. Do I like it down here? I would argue that all of you, every single one of you, has some things about where you live that you love and other things you're like, I don't like that. One thing I love about here, I know Big Ed would agree with this, the weather. It's hard to fight that weather. Anyway, I won't go off on that soapbox anymore. It's just... discourse, communication, and understanding would get us a lot further than blanket statements and racism and hatred. Okay. On that note, are the people of Orange County representative of the entire state? Yeah. I'd argue less, are the people of Cape Canaveral representative of the entire state of Florida, right? No, absolutely not. No, just let's stop and think about it. And he kept saying that my comments proved I was a socialist a-hole over and over again. I was like, wow, okay. Pleasure listening to you, bud. Beat it. So the reason I bring this up is you have a lot of people with that mindset. And because of what's going on, they're going to attack Teslas. And I, for me, John, I just have a hard time. I have a hard time jumping on that train right now. Is there a lot of opportunity? Yes. If anything, it was funny because last week when I was sitting at that pool, you saw that big drop here on Thursday. I was at the pool party on Friday, and I actually had Tesla up on my screen, and I was going to sell some puts on it. But I was looking to sell those 270 puts. Would have been perfect. And in hindsight, just obviously 2020. Unfortunately, I did not sell those puts. If I was to trade Tesla right now, personally, I'd rather sell puts than buy directionally and go outright. So I'd be looking at selling puts maybe around this 285 level, maybe for the longer haul. And if I get it 285, great. But it's had a pretty significant jump here, and I think a lot of that has to do with the calming discourse between Trump and Musk. We haven't heard shots fired like crazy, and we also haven't heard any retaliatory attacks on Tesla or Tesla dealerships after the departure from the alliance with President Trump. So kind of crazy. Big Ed says you did well in Circle. I did well in Circle, but I'm not out, right? We can't boast about a trade that we're in until we're out. You know that one all too well. You can boast about a trade that you're in, but every time you boast about a trade that you're in, it seems like the market's here and go, let's take it the other way until they get stopped out. So until I close that bad boy, the verdict is still out. Today was a decent day on it, but we'll look. So, John, I would not be a buyer of it here. If anything, I'd be selling puts and maybe trying to get that 285 mark, which would be considerably lower, maybe 300 even, but not jumping on at 327, 326. Nope, not there. Let's see. What was the second question? Okay, this one's a little bit confusing. And Glenn, I saw you here, so I will go over this question right now. And I know we have a lot of people in the room that do the wheel strategy as well. And I'll give you my 2 cents on your trade. So let me walk you through this one. It's a lot of text here, but I did map it out and graphically show you. He says, I'm in a wheel trade with Tesla. I was assigned shares last Friday at $320. So let's go and let's modify our charts here, get all his numbers on the screen. So let's put the 320 strike on there. That horizontal blue line is your 320 strike. And you can see that as of Friday, really Thursday was probably one of those days you were not happy with, right, Glenn? You're like, oh my gosh, what happened? I actually like where you sold your 320s. I would have done the same thing, but that Thursday session was one of those good God moments. Anyway, so you were assigned on Friday, and you sold the 320 calls against it. And let me continue reading. It says, on Monday, I sold a call at 320 for this Friday at $3. So you sold the 320 call against your position, covered call, and you collected $3 worth of premium. He says, I'm not surprised that it came back to 320 in just 2 days, but the call went up to 850. Absolutely, yeah, that's going to be a big spike there. Now, Glenn, here's where I don't understand the transaction. You said, I bought the call back at the market, and right after, sold the call at market at 320 for this Friday at 855. Hold on a second here. So let me see if I can draw this math for us. So here is the math. You sold the 320 put and you collected $3 worth of premium. Then you bought back that 320 put for 855. Thus, on that specific trade that you already have closed out and no longer have any exposure to the market, other than having the underlying shares, that cost you $5.55 per share. Okay. So then you proceeded to say, once you bought back your 320 put for $8.55, you sold it right again? I don't know what that did, because from a math perspective, your first trade would have cost you to lose $5.55 per share, right? And then on the second one, you collected $8.55. So on net, you're a $3 positive, which is what you would have been if you just left your initial, right? If you just left your initial trade open, that 320 that you collected $3 on. The last two transactions that you did here is you closed your 320 and that cost you $8.55, and then you sold it again. For the wheel strategy, I'm not quite sure why you did that. What I think you wanted to do is you're probably thinking, I believe this is going to go higher. Therefore, if you think it's going to continue to move higher, yes, I would have bought back the 320 puts, and then I would have. I'm confused on this one. Was it a 320? It has me totally confused. I don't know. I don't understand why you closed that put and then bought it back. Let me make sure from your text that you were actually in the put. I want to make sure that's correct. You were assigned shares last Friday. I sold a call. Okay, I'm sorry. So my numbers are wrong. So I'm collecting as much premium as I can until the shares are taken away. Yeah, but it wouldn't matter because my numbers on the screen were incorrect here. Those are you sold calls against your position, not puts. Okay, so that's my fault. You're not making any more. You're not going to make any more premium because the option that you closed out, you sold it again, and you made no extra money on this trade. There was no extra. What you could have done is you could have taken this, okay, your 320, you had your 320 call that you sold for $3 against your shares. Now that it's higher than that, right, it's at 326, most likely to get taken away. If you wanted to hold it and get more, I would have closed this one out, paid $8.55, and instead of selling the 320 call, I would have gone for something higher, right? The goal here in case is keeping yourself in the trade. And let's say you sold the 340. Now those numbers are going to be very different. So the numbers you see here will be question marks because we don't know what that premium that you would have collected is. But that's how I would have done it, right? If it's already moving up, I wouldn't have closed my call, right? I wouldn't have bought that one back and then sold it again at the same price. You're just spinning your wheels, making money or losing money. There's no real benefit or incentive there to do that. So the 500 I was down today, I just collected it. I don't see that. I don't see that one. I thought the wheel strategy sell puts, get the stock, cover calls, and have it taken away. Yes, Lisa, that is what the wheel is. That's what I'm looking for. It was just, I'm not quite sure why these two transactions, they negate each other, right? If you bought back your 320s and then you sold them again right away for the same price, you didn't make anything. There's no gain there, right? There was nothing that was gained by that. By closing out that 320 call, right, you locked in that you lost $5.55 per share. Then you sold that 320 again for $8.55. You're still only making $3, which is what you would have made if you just kept your original 320 puts or 320 calls. So I'm not sure that second one. The only reason that I would have done this transaction the way that you had done it, Glenn, is if I wanted to hold on to that test a little bit longer and roll it into the next one and take that $5.55 loss, but sell it at the 340 strike the next batch so that I get more of the premium. Okay, I know it's really confusing, but that when you sold or when you closed your position and sold it again, that was a wash. You basically paid transaction costs but got nothing out of it. Because if you look at the numbers that I had here, it ended up being the same number. Let's go Control Z. Oops, one second as I get in here. Right, when you look at these numbers, oops, one more. These second two transactions at the bottom are a wash. You collected you paid $8.55 to close it, and then you collected $8.55 to sell the new ones at the same strike. That's a wash. So yeah, I would have done it at a higher number. Margaret says the cover call strategy should not be aggressive. Normally it shouldn't. However, if you find yourself in something, let's say in the covered call strategy, wheel strategy here, you sold puts, you got assigned your Tesla, and you said, okay, if it gets to 320, I want out. Now all of a sudden it's already above that, and you're like, oh, wow. One of two choices. You can either let those options expire worthless, or in the money and your shares get taken away, or you roll it to a higher strike price, which I have done in the past. If it's something I've done that actually to MicroStrategy and SMCI in the past 6 months, where the momentum was there and the chart said it's going to continue to move up. Therefore, I'll take a loss on that first option in order to keep those shares and collect the bigger premium, the bigger upside potential on this outright pricing of the shares. But that's a little more complicated, and you really have to have good conviction that Tesla is going to continue to move higher here than 320. You know, personally, I think that you should have just kept your 320, right? Because if you just kept the original trade, you would not have spent the extra commission. And granted, if you look at the numbers here, these last two, this +3, oh, my drawing tools aren't going to work for me here today, are they? This one here, that, and this one wash out, right? They cancel each other out. So you haven't done anything with that, and you're right back with the original position that you were in. So what does Steve say? I have sold cover calls at the money just to collect a bit more, knowing I want out anyway. Yes, me too. Absolutely. And, you know, also, in this case, I like the fact you sold the 320s because you thought, okay, well, I'm going to sell at the price that I was assigned at, therefore it's a wash. But it's not a wash because you would have collected the premium that you initially had by selling those puts, and by this Friday, if it closes above 320, you get to keep the premium for selling those calls. So it's not like it's a break even. You're actually going to have a fairly decent rate of return here. Now, the only real risk of doing the strategy that I was talking about, which is buying back your calls and then selling it at a higher rate, let's say 340, the only risk there is that over the next 3 days or 4 days, so Friday, it sells off and now closes below 320. Now you're going to be losing a little bit more. Personally, I think you just keep the 320s. The volatility on Tesla this week is going to be fairly choppy. Yeah, we started off on 2 good days for the week, but it would not surprise me to see this thing close around 320 by Friday. So I'm hoping that wasn't super confusing. I know when I read it and went through it, I was trying to figure it out in my head. I'm like, why did that happen? Where was that? So, yeah, there we go. Liz says, by crystallizing the loss on the short call, you raise your cost basis. So now to get out at break even, you need to sell calls at a higher strike. Yeah, but since he sold them exactly the same price, those are complete washes. And now he's still got that $3 premium is the most he's going to make on this one. Yeah, you didn't lock in any premium because now you're going to have exposure on the second part. To me, it's a wash. Yeah, it's just a wash. These trades, basically, you just paid commissions and you got nothing out of it, in my opinion. Because when I did the math here earlier, we saw that at the bottom, at the end of all this, you're still only making $3 worth of premium here. And their cost base is still the same. You still got the 320 strike. So it's going to get taken away at 320 no matter what. You still collected $3. Oh, the beauty of options. Can be very confusing at times. Normally, per the conversation, I think it was Liz was saying, in that wheel strategy, I'll sell that, whatever that strike is that I sell the calls at, I'm happy to get out at. For example, right now, I've got several on MicroStrategy. Liz is right, but right now, if he gets called away, he'll make a loss on the stock. No, Liz, because he's still getting out at 320. He's still getting out at 320. I don't think the whole thing will be a loser. The whole thing it'll be fine. So, like on this initial trade at the top, he'd be a loser on that one. But because he sold the 855s, he's collecting that new $8.55 worth of premium. And you subtract $5.55 that he lost from the $8.55 he gained, you got $3 total gain on the two trades. And that's right where he would have been in the first place. Yeah, absolutely. And Steven, that's a great comment. He says, we all make mistakes and the pressure's on. I've done it. Hell, I still do it once in a while. Yep. And I don't know if it's necessarily a mistake. I think it's, you got to understand the mechanics of it. And that's why you ask questions and you get, the group consensus. Well, the hive mind will help you out there. Yeah, we all make mistakes. And I'm glad you said that, Steven, because you guys know I've been doing this since 1998. Actually, 1996 is when I really started investing my own money, but 1998 is when I started super active day trading. Here we are 28 years later. I still make mistakes, especially when you go too fast. And options can be so difficult because you're selling to open, you're buying to close, you're buying to open, you're selling to close, and puts and calls. It can be really confusing. Oh no, Glenn, I was not intended to be slapping you around a little bit. I just, for me, I'm a visual person. So I had to build this out to kind of really understand what the heck you did. If you got the strike exactly the same. So if you wanted to get out and make more money, you could have sold the 330s, the 340s, and that would have made sense to close this one out so you keep your position a little bit longer on the underlier. And your underlier would have made you more money, right? If you sold, let's say, the 340s, you would have collected $20 more per share, which, if you had 500 shares, you're looking at $2,000. Actually, no, 10. You had 500 shares, you make another $20 per share. Yeah, $10,000. You'd have made another $10,000 on the underlier and a little bit on the premium. Okay. Yep. Exactly, Stephen. You just got to identify those mistakes, recognize them, and in this case, there's some flawed logic there, Glenn. On you thought you were going to lock in the premium there, but you gave it right back. So, okay. Now, what other questions did we have? I had this question here from Mike. And Mike, I had all intentions of mapping this out for you today. I think I might actually I'll probably do it tomorrow. But it's the question about the sphere seating chart. I'll tell you very quickly in case you're looking to rush to get tickets today. If you are going to the Sphere in Las Vegas, the worst place to be at the Sphere is in the 100 seats. Which is funny because the 100 seats in most logic minds is the closest to the stage. It's the worst seat in the venue. If you are in row 20 of section 100, you are under an overhang and you can't see anything. I don't know why they built it. It's absolutely horrible. Your best seats, I would argue, if you want the visual, the crazy, beautiful visuals, you're looking at sections 300, obviously as centered as you can be. And by the way, I don't know if anybody here is a fan of The Wizard of Oz. Do we have any Wizard of Oz fans? I mean, that movie, obviously I wasn't alive at the time, was one of the first color movies. And can you imagine being in, I believe it was 1930 is when that movie came out? And you're sitting in the movie theater, it's all black and white, and you're used to black and white. The talkies just kind of ended, the talkies just started, and we got a black and white movie. And all of a sudden, that house lands on the witch and it blows into full color. Could you imagine being in that theater in the 1930s when that happened? Just mind-blowing. Anyway, the Sphere is doing The Wizard of Oz, which is, I don't know how they're going to do that. Like, you're literally in the tornado, and, it should be really, really, really crazy. Judy stole my family's last name. I'm going next week, so I appreciate the tip. No problem, RG. Yeah, just don't fall for the 100 seats. And what you're finding now with a lot of shows, the 100s are the cheapest prices. Look, the Sphere is this like almost fully covered dome on the inside of lights. What I'll do tomorrow is I'll show you the different seats I've sat in over the years. I've been there 7 times, so I've sat in a whole bunch of different seats. And certain spots are more visual. Other spots are more about the show. So if you want to be close to the band, as close as possible, then you get as far up in the 100s as you can get. The middle 200s are great, but you don't get you're going to have to like lift your head back a lot. The 300s and even the early 400 seats, you get this just amazing, epic view of the venue. It's phenomenal. RG, are you going to see Kenny Chesney? I think if you're going next week. 1939. I thought it was 1936, but yeah, 1939. Crazy time. It'd be crazy to see that one live. I would love to have seen that one live, but now they redid it, they remastered it, it's going to be at the Sphere starting in August. I literally may go up just to watch The Wizard of Oz, because it's one of my favorite movies. I think top 10 of all time. Real acting, epic storyline, and just, great movie. Anyway, not like the new one, Wicked. Ew. All right, what else did I have on here? RG, if you can, I'll tell you, Kenny Chesney was a great, great show. Phenomenal. And I'm not a country music fan. It was a great show. Really good. Hate to admit it, the country act was really good, but it was phenomenal. Scott asked this one. He says, I'm an OTA graduate and mastermind member. I would love to take your digital assets full class. What is the best way to do this? I've already done the orientation, listened to you on YouTube. The focus class is probably the best way. And just so you know, the focus class is like the whole crypto program live. We do it live. Not in person, but live online. And then I do 4 application sessions. So I do a full 1-hour application session on how to buy, sell, move, transfer, all that stuff. Second application session is all about how do you find things to invest in, right? So we go through the whole filtering process. I have a whole checklist of questions and things to answer as you're analyzing a project. Third application session is all about staking and earning yield on your crypto. And fourth one is about DeFi marketplaces and using DEXs. But I've added 2 other sessions that are just open. So open forum, which is what we did this morning in this session. So that's probably the best way. There is a digital assets on demand, which I think is a much lower price, but it doesn't have any of the live components that the focus does. All right, let's go take a peek at what happened out there today. There was obviously some market movement, but nothing, it really wasn't that dramatic. I didn't think it was really that great of a day. I'll start my way at the bottom and work up. So I did put this out on a TikTok account as well, which I really hate doing it. I just got to do every night this TikTok stuff, and I may have to put an end to that one because it's just so taxing. But I do put out kind of what's happening this morning and what's going on. Crude oil had that inverted head and shoulders pattern. Again, $72.14 is the target for that measuring object from the bottom of the head here to the neckline. Today we were down 0.47, so a little bit of a reprieve here on crude oil. But I'll tell you, the measuring object does tell you that prices are going to go higher. However, macroeconomics and just the politics kind of still make me believe it's going to be going down. But we are still on that upward trajectory here, at least for the past month and a half. All right. Let's go to gold. Nothing, right? I don't know. If there was something eventful and noteworthy and tradable or actionable, I would make a note of it. But you notice gold, another day where it just doesn't have any real trend, no real direction other than sideways. And, maybe what I'll do, it's tough because normally I like to put boxes around things, but, how do I do that here? Do I do it across the most body contact? Do I do the tails, right? I could do it from a wide variety of places here, so it's not really a clean zone, but essentially you're looking at more just sideways action here for gold. So I'll just have to leave that bad boy there and not really comment on it anymore. Now, going back to our 10-year. 10-year still has that slow, slight stair step up, but its action today, unchanged. 0.04% decline in the 10-year yield to 4.474. No big deal. Who cares? Move on. Dollar index. Again, nothing has changed. It's still stuck near those lows. I do think that 98 will hold for now, but the more times we get into this yellow box and we touch that yellow demand zone on the dollar index, the more likely it's going to break down. It's just the law of supply and demand where you have chipping away at whatever orders may be there. The longer it stays down here, certainly the weaker it's getting. All right, we're close to the podium time. We had the Russell 2000, and this is where you have to feel optimistic for the broad market indexes. The Russell, the S&P, and NASDAQ all have very, very nice trajectory right now. And the yellow box we had on all these markets, and you'll see it here in just a second, was kind of that overhead ceiling that they all were struggling to get above. Well, Russell is well above it. And now the big question is, where is that stopping point for the Russell? If I go to the kind of the high point of this big down move, 2195, but there isn't a real clear supply zone here to focus on unless I break it down in maybe an hourly, but I'll leave it at the daily just for now. So that's the Russell. Russell looks fantastic. Your S&P, similar picture. Now, that 6,000 mark was one that we toyed with for 2 days. Barely closed above it on Friday, barely closed above it on Monday, and now all of a sudden we get that nice little pop. Now, it was only up 0.58% on the day, but a great move. And just, at least for me, confirming that 6,000 is going to act as a floor. Because yesterday, if we look at here, I was not very confident that this was going to be going any higher. It just stalled out yesterday on Monday's trading in a very tight range, not good. But when you had that, that's a good sign that we retested it and now bounced higher. So that leads me to believe that we're going to be going to all-time highs here. I don't see anything really to stop this market until we get up to that 61, 66 mark. So that's where I think we're headed. Let's go to our silver metal. The old NASDAQ. Same picture, right? Actually, this one looks better because it's been making higher highs and higher lows more consistently. NASDAQ looking incredibly strong here. 0.65% gain on the day to 21,962. And again, we have all-time highs coming up. The number that I have mapped out here is not the all-time high. 22,224 is where we'll probably head to. Your all-time high goes back to December 17th, which is just slightly higher than that. And finally, Bitcoin. We are going to be very close to challenging all-time highs here in just a day or two. I do believe a lot of this has to do with the Genius Act. This morning with my students in the focus session, we talked a lot about the Clarity Act, which is going to be the next bill to go through. If the Genius Act gets pushed through, at least within the next 2 weeks, I'll all but guarantee Bitcoin's at all-time highs. If the Genius Act gets pushed through, what will happen is we'll open up more discussions about the Clarity Act, and that is what's really going to shape the landscape of all digital assets and cryptocurrencies. So the stablecoin bill, which is the Genius Act, is great, but it's the Clarity Act is the one that really is going to create significant momentum. And, we talked about this a while back. I actually added a new index here. This is all-time Bitcoin USD. And we talked about this the other day. Let me take it off of logarithmic, which was, I think when we were back here, 1 second as I fill it all in, when we were down around the 74,000 mark, I think I did a survey and said, how many of you think I'm absolutely cuckoo crazy to think that Bitcoin's going to get to 250,000 now? And there were a couple that thought I was a little crazy, which is fine. I'm fine with that. And now all of a sudden, we find ourselves up near that 110 mark. Well, that's significantly closer. I mean, we would only have to get, to get to my $250,000 target, which I firmly do believe that we're going to get to from current levels, from today. Let's map it out. You're looking at just over 100%. And let's get up to 250 there. There's 250 on the DIZOT. And that would be a gain of 126% for Bitcoin. And it would have to do that by the time we got to, let's say, November. So this is really the chart of what it will most likely look like. And it's starting to not look so crazy. I mean, the trend really since April has been aggressively the upside. Granted, that is a pretty steep one, a pretty steep jump. And I don't think it's impossible. I still think it's on the table. I'm all for it. Look, if we get the Genius Act stablecoin bill passed, and then the Clarity Act within the next few months, before, let's say, September, then you've got all the catalysts you need for a significant upside potential. Remember, every bank in the United States, after this Genius Act is passed, will now have full authority to create their own stablecoin. So Bank of America will issue stablecoins. Those stablecoins will be on blockchains, which have interoperability. So I can go buy the Bank of America stablecoin, which will be approved by the Federal Reserve and the agency controlling the stablecoin market. So I can now buy very quickly that Bank of America stablecoin, and I can immediately put that into any other digital asset DeFi marketplace I choose to put it into. That opens up adoption on a whole nother level. Not only that, but with the Clarity Act, we'll get rid of some cryptos in America. More money will flow into the good ones, and that will gain further adoption. So it's going to be pretty crazy. Big Eb says, if it gets to 250 this year, I'll take the tax hit. I will too, my friend. I will too. There was a lot of talk about President Trump removing the capital gains tax. That actually was not President Trump. It was Eric Trump that said that. And that, I doubt that will happen. I certainly hope it does, because if we get to 250,000 per Bitcoin, I'll be a very, very happy man. Margaret, which part would you say isn't that bad for Bitcoin's price? You mean the fact that all these banks will now have stable coins? No, it's great for Bitcoin's price, because one of the reasons that Bank of America doesn't hold Bitcoin, or Wells Fargo doesn't hold Bitcoin, or JP Morgan for that matter, and hold Bitcoin, is because Bank of America, Wells Fargo, JP Morgan Chase are they're part of the Federal Reserve System. They have a federal banking charter. And if they were to custody Bitcoin, when the Federal Reserve says you cannot do that, they could lose their federal charter license, right? They lose their bank charter, and obviously they would never want to do that, so they're not holding digital assets. If Jerome Powell has already said banks can custody crypto now, but they're waiting for the framework to be put in so nobody's going to be caught holding anything that's quote-unquote illegal or dangerous to customer accounts. There also needs to be rule on segregation of customer funds versus bank assets. You can't pool those two together. That happened with FTX, and look what happened with FTX. So the framework is getting there, and once those rules are in place, it's great for Bitcoin, Margaret, because now Bank of America will say, hey, you can buy your Bitcoin and custody it here. Every bank will have access and exposure to digital asset markets, which means adoption, which means I can now go pay for things at the store with digital assets, whereas before I could not do that because banks won't accept it. Kind of like banks won't accept deposits from cannabis companies here in California. Cannabis is illegal federally. You got a federal license. The Federal Reserve says you can't accept that money. If the Federal Reserve says banks can accept crypto, here we go. It's like literally the Kentucky Derby gates opening, the little bell ringing, and all of a sudden cheering, and just the thunder of horses. That's what it's like to me. If no capital gains on Bitcoins, it could hurt the price because everyone cashes in. I think you're right there to an extent, Big Eb. But if that were the case, I would dump my Bitcoin and buy right back in, same day, just to reset my cost basis. All I'm trying to do is sidestep the capital gains hit. I still want exposure to Bitcoin, right? Unless it's November and we're at 250,000, I think we're going to crash. Toby says, bad for Visa, MasterCard, American Express, then time to short. Certainly there will be some challenges for them. So, I could take a Solana blockchain crypto. So let's go look at Solana here real quick. We've kind of digressed into a crypto discussion, but it's coming. I mean, pretty soon we're going to have, everything is going to be digital, guys. It's going to be nuts. Here's the chart of Solana, right? And it's not been doing that great. Certainly been struggling here as of late. Moving up a little bit. Nice that it came right back down to that zone we had mapped out. Solana is a blockchain that is used to transfer money back and forth, plus much, much more, just like Ethereum. Now, Solana's transactions are just a couple of cents, a couple of pennies. Whereas if I use Visa, I'm 3%. So let's say I'm Merlin's Widgets and Les comes into my business and he pays me with Visa. I have to mark up my goods and services 3%, or I'm taking that 3% hit every time he swipes his credit card. If you were to use Solana, and remember, I'm the business owner, so I can say, hey, use your Visa card or use Solana. If he comes in with Solana, I get the same speed of execution, if not faster with Solana, and transaction costs of a couple tenths of a penny. I make more money as a business owner by using Solana than I do using Visa. So what will probably happen is it will start to lower the cost of transaction on traditional payment networks like Visa and MasterCard. So Visa and MasterCard and that network, because remember, it's not just Visa, it's the banks connecting Visa. So like your bank might take $1 or 1%, Visa will take 1%, and then the other bank will take 1%, therefore it's 3. So the banks will always get their piece of the pie. But we could use Solana and pay just fractions of a penny and make it much faster and more efficient. So I think that once businesses realize this, especially big ticket items, buying a refrigerator that's $5,000 with a credit card, I'd much rather you pay me with Solana. As long as the owner, I can take that Solana and convert it back to dollars if I want to. But with Solana, you have to have the cash, yes? No, not necessarily. If you have Solana, there are payment networks out there that are starting up that will settle that in another currency. And I think that's the next big step, in my opinion. I mentioned before, that's the $1 trillion idea, is to start a crypto exchange. And then to the answer to Steven's question, when someone pays me in Solana, let's say I don't want to own Solana. I get paid in Solana and I convert that to USDC or a stablecoin or something else that I want. That's the next step. All right, Les gave me 2 question marks, so he's important. Why would I want to stop using my Visa card and use stablecoins instead? Well, it's a good question because you do have the incentive to use your Visa card, right? You probably have some perks depending on which bank it's with. You might have a points card or an airline miles card. So you do have incentive to use that. As the consumer, here's my incentive. To me, it's sticking it to the man. That really is the main reason for me anyway, is like, I think Bitcoin, I think Visa and MasterCard are usurious. I think that the amount of interest that the banks and Visa, MasterCard charge people keeps them poor. I know so many people, I'm sure you guys have some friends as well, who are carrying balances paying 25%. That should be illegal in my opinion. That's just taking advantage of people unnecessarily. So I would be using the digital side of it just to circumvent those major financial firms. And that's the main reason I would do it. A-Rod, I tried that code. Yeah, A-Rod, apparently, I asked her today, I don't believe that is I think it's just a tracking code. I don't think it gets a discount. I haven't gotten a response from her. I sent them out today. But I'll hopefully get some definitive answer on that one, A-Rod. That code, she told me to use the code, and I tried it as well. I tried to book something, and there was no discount given. So I think it's just a tracking code. Not sure. I'll get you a definitive answer tomorrow. Why should we pay capital gains on crypto? Well, technically, you're stating that it's an asset, like a commodity. So if I was to buy gold at $1,000 a coin and sell it at $3,000 a coin, capital gains. That brings up a bigger discussion, which is, why do we pay taxes on a lot of different stuff, right? Tax this, tax everything, Margaret. But that's why you would pay capital gains on crypto, because it's considered an asset. And therefore, in some cases, it's a security, and you're paying the difference between what you bought it at and what you sold it at. I mean, technically, even if you bought a car for $5,000 and you sold it for $10,000, you have to pay $5,000 on capital gains there. Of course, most people just say, "Oh, well, I sold it for $5,000 on the bill of sale," but hey, that's up to you. Yeah, definitely a bummer, but we'll see, A-Rod. I'm not 100% sure, but I feel like that's the answer. Like I have Chase Visa. Could it be Chase Solana? It could be. But Tofi, I really think that what will happen is I believe that Visa and MasterCard will start their own blockchain. They'll start their own blockchain. We already know that JP Morgan has started their own blockchain. It's called, it was Onyx, and now I think it's called Connexus, is the blockchain that they're using for payment systems for money market funds and conversion between banks. Ultimately, down the road, we will see more and more of these financial firms using blockchain digital assets, and that adoption, whether they're using existing systems or taking technologies and modifying them, bolsters adoption even more. Does Circle pay interest on a stablecoin to customers? If it does, their revenues, profits, and in turn its market cap will be lower than what you projected yesterday, right? Correct. Circle doesn't, but because Coinbase is a part of Circle, they're offering it to their customers. So they don't have to pay a yield. Now, I can't remember off the top of my head, Sadir, it's a good question. I do believe that in the Genius Act, it says that these stablecoins cannot pay interest, which is, well, like, whoa. You can't pay interest to the customers that hold it? I'll be clear. I want to check that one to be a little bit more clear. But if that's the case, then this could create some problems for Coinbase and Circle, right? Because Coinbase is paying us 4.1% right now. Let's see. Will stablecoins give you cash back? So again, Les, to what I've read in the Genius Act so far is they're not allowed to pay. That's part of the rule of a stablecoin is they're not allowed to give you interest on it, which I don't know. We'll see what the final bill says. Because if that's the case, then how is Coinbase paying you? How is they paying you 4.1%? I rolled S-Band Circle yesterday. I see it dropped nice today. Not sure what it did in the afternoon. It was okay. So Circle, again, I'm still short. So I don't want to, I feel bad even looking this one because, oops, CRCL. I put that on here just so we could have that for posterity purposes. We're down again in after hours. It's 104.5 right now. Today we had an intraday low of 101. I strongly believe, like very strongly believe, that we will be down below triple digit. We'll be in the double digit category by this Friday. And granted, I've got another week or so on this trade before it finally expires. So I think I'm in a pretty decent spot. I'll be honest, I'm shocked that there was options available for this one. So yeah, I'm in at the 110 puts. My cost was $10 per. It's already up over that. So no, just 3. Not 10. It's funny, Big Av. I was sitting there, I had my finger on the trigger, and I was like, okay, I could go for more. I could go for 10. I was like, let's just have some fun with it, just a little bit, right? Just a little bit. I didn't want to get too wild with it, but to me, this was, I hate to say it, I hate using the term no-brainer, but looking at how overvalued it is, at least for the short term, yeah. Looking to double my money? I'm not saying I'm looking to double it, but it could easily happen. I'll let you know. I mean, we're in it at 10. Today we hit a high of 15, so within 24 hours at a 50% rate of return. Not too shabby, but I think we've got a lot longer to go, a lot further to decline here. I don't believe that by the time these options expire, it will be below this, $60, $69 where it opened up at. But I do think we could easily be in the 70s, 80 range. That's not that big of a deal. Let's see what else we have in here. Is it okay to hold Bitcoin USDC compared to Bitcoin USD? Yes, A-Rob. Yes. USDC is just the stablecoin side of it. You are still in a spot market where you're using... Yes, you're fine. Fine with that one. The only thing I'd be a little concerned with would be using a cryptocurrency that's based in Tether. So if it was BTC/USDT for Tether, I'd be a little more cautious about that one. Tether, I think, is going to have some problems once the stablecoin bill, the Genius Act, gets passed. Tether has to really do a lot to clear up the... opaqueness is the word I've been using for it, but they're kind of not disclosing all of their holdings very transparently, and it's out of China, so I have a feeling that the government won't give them a permit, won't allow Tether to operate, and that's going to change a lot of the landscape of crypto because most exchanges use Tether as the cross pair, as the dollar. So that will switch over to USDC, which should give them a lot more adoption. It should bring up their value from 61 billion presently of stable coins to over 100 billion in a short period of time. Let's see. Have one more contract trailing short on Circle. Nice. I went with the 100s. Great. You paid a lot less for the 100s, but I still think you're in a good trade. Just the basic numbers of this. Like I say, if this was a semiconductor like an NVIDIA, maybe I wouldn't feel as comfortable with it, because they could easily get more contracts and sell 50,000 new units and all of a sudden sales are through the roof. This is a stable coin. It's not like rocket science. They have very specific rules on what they can buy into. Their rate of return is not going to be that great. The only thing that will cause Circle to go up significantly in value over time is more people using USDC, using the stablecoin. The more that value increases, the more they'll make off the interest from their treasuries, their repo market, and from their savings holdings. So, and I do believe we will see that. I do believe that the total market cap for stablecoins, once the Genius Act is passed, will be over $1 trillion in a year. Right now we're at like 200 billion. So 5x in a year, I think that's totally possible. A-Rod says, how do you shift your perspectives from day trader to investor? Easy. Very easy. I go in, if I'm like, most of my day trading is just futures. So I'll go in there and I say, okay, I know I'm going to be out by the end of the day on this trade. No problem. Just lock it in. Yeah, I really have kind of two main mindsets. A shorter term like day trading and then swing trading, which is really where I would say 90% of all my stuff now is swing trades. Trades that last a couple of days to maybe a couple of weeks. I still have a 1% account where I'll do rolling 30 days, but that's not my biggest account anymore. I'm becoming a bit more aggressive, which has been rewarded so far this year. Tofi's had some good trades on Tesla. Yeah. There's plenty. Yeah. Margaret asked if I have a sell to close order placed. I do. So and it's all based off premium, and I'm expecting there to be a lot of volatility. Margaret, my sell to close is $30. Remember, I bought it at 10. So getting down to 30, if it was the 110 and it did it today, 30 would be your $80 strike price. So that's kind of where I'm anticipating it getting. But I don't know. I doubt it'll get there. I think we could get down to. But I do have the order in the system. If there's some, black swan event and it just rips down there, great. I'm not going to be upset, buying at 10 and selling at 30 in a couple of weeks. So there we go. All right, guys, that's going to do it for me. Let's talk about earnings. Let's get into that here real quick here. We had some earnings announcements that I want to make sure we cover for mañana. We got a couple of bigger names. We think we're talking, let's get to, there it is. You've got Oracle reporting aftermarket close tomorrow. That's really the biggest one. You can tell by the market cap here. A lot of international, which I don't really care. You've got Chewy as well reporting earnings, but really it's all about Oracle. There's not a ton of other really important stuff going on. And then when you look at the macroeconomic side, we really haven't had a lot of great macroeconomic pieces. Now, someone called me out. I think that they said I made a mistake on my Monday morning must-haves. I don't believe that I did, but maybe. The CPI number comes out tomorrow, and I believe I had that correct. Maybe I was wrong. But yeah, CPI coming out tomorrow. You have right now expectations are we're going to be at 0.2%. That's where it's currently at. And that would be fine. I think if we have 0.2, that's no big deal. That's right around the long-term historical average for the U.S., so that would be welcome. Anything underneath that or significantly above that, I think creates all kinds of chaos for tomorrow's market. So keep your eye on that one. That's 1 hour before the market's open. If you are trading crude oil, you do have crude oil inventories coming out, and that's pretty much it for mañana. Robo-taxi event tomorrow. Yeah, I'll talk about it then. I mean, look, I think that dovetails into the stuff we talked about with Tesla today. I think that the robotaxi event's going to be pretty good. I think it's going to be very well received. I think it's going to be a good thing. What could derail it is, since this is in Austin, that there is a significant protest against Tesla, which could happen, right? Right now, the protesting seems to be the hot commodity. Everyone's got a protest going on, and there's some people that absolutely despise Elon Musk and Tesla. Remember, we saw it burning that several months ago, and now we could be back there soon. So hopefully it goes smooth. I think it'll probably end up being good for Tesla and a nice surge to the upside. But just based off the uncertainty, the unknown, I'm staying away from Tesla. But we'll talk about that one on tomorrow's show. All right, guys, I got to run. Hope you guys have a fantastic remainder of your day. If you guys have questions for me, like I got from Scott and John and a few of you others, feel free to send those on in to tradermerlin@gmail.com. You see it on your screen. If you're new, hit that subscribe button, click the bell, and I will see you guys tomorrow. If you got a topic you want for tomorrow, email me. See you tomorrow.